Yes, I mean, I suppose, this, like all of these things, it's not necessarily the direction of the movement, but the speed of the movement that's been the real issue and the real concern for global markets. In terms of the fundamentals behind the oil price, I mean, last year we were, I think, looking at a situation of modest global oversupply. So a downward trend in the oil price was by no means unreasonable. It's rather the scale and the violence of that downward move that has upset people and continues to overhang markets. But as we know, it's a truism in all markets that prices overshoot and undershoot, and we're clearly, I would say, in an overshoot situation now. And that environment has perhaps been encouraged by the willingness of OPEC to maintain production at current levels, perhaps with a view to putting pressure on the US, the shale producers. Well, I think if the risk-off mode is sustained, then we see once again the flight to safety, which I suppose at the margins we're witnessing now with the direction of global bond yields, or certainly US bond yields. India, of course, I mean, just to focus on India, of course, is a tremendous beneficiary of the weaker oil price, as we all know. India imports, the vast majority of its energy needs. We also have that additional sensitivity in the fiscal and current account position because of the domestic subsidy regimes, although, of course, these are all changing under the new Modi government. But a weaker oil price is tremendously positive for consumers in India, and tremendously positive for the outlook for inflation in India, which is already, as we know, on a significantly improving track. So, and that of course is true of many countries within the Asian region. India, I think, stands out as being perhaps one of the greatest beneficiaries. Thailand is also a significant beneficiary, and many other markets the same. So although we're fixated at the moment on the issue of volatility and perhaps what the oil price is signaling in terms of global growth, what we need to think about at some stage is actually the upside arising from a weaker oil price. And that means lower costs for Asian consumers and stronger fiscal and current account positions for markets like India, Indonesia, Thailand, and so on.